11 Best Tips for Investing Your 401k During a Recession. 1. Don't lose money. 2. DCA, dollar cost average. 3. Be concerned with asset allocation. 4. Cut costs and increase income. 5. Keep up the pace on contributions. 6. Look at the big picture.
Just keep going.
7. Maintain a diversified portfolio. 8. Keep investment costs low. 9. Keep a balanced risk and return portfolio. 10. Take a loan from your plan. 11. Look for bargains. Don't lose money, as Warren Buffett said. Don't rush selling your investments during a recession. When the stock market is going down, it's tempting to try to sell everything to get your money out of the market. However, this won't do anything but further damage to your portfolio. The best thing to do during a recession is to stay the course, holding on as long as you can. If you're young with a long time before retirement, it could be a good time to invest. Even if your investments are losing money, they're likely to be cheaper than they were before. In the end, your portfolio will likely be worth more than it was when the market crashed. DCA, dollar cost average. This is the most common investing strategy, and it is widely used by professionals and retail investors. It is relatively simple and easy to follow. When you decide to buy a stock, you decide on a purchase price. After that, you buy that stock whenever its price falls below that purchase price. Be concerned with asset allocation. Asset allocation is the selection of a mix of assets that will provide you with a return while keeping your portfolio within a certain range of risks. When selecting an asset, be sure that you understand the risk associated with that asset and how it will affect your overall portfolio. An asset allocation of 60% stocks and 35% bonds and 5% cash is a good starting point, but is also flexible enough to add more or less of either asset to suit your specific needs. You can increase your return by adding more stocks to your portfolio, but also increase the risk of losing a large chunk of your money. Be mindful of your asset allocation and consider your goals, risk tolerance, and other factors when deciding on it. Cut cost and increase income. The best way to increase your wealth is to follow the example of a successful person. You could also consult with your friends or colleagues who are wealthy individuals. It's not how much you make but how much you keep that matters. That is the key to financial security. The trick is to not spend more than you earn. There are many ways to cut costs, some of which may be uncomfortable but they will save you money in the long run. You also need to learn to say no to unnecessary expenses. The key to growing your wealth is to reduce your overall spending so that you can increase your income. By cutting your expenses and increasing your income, you'll be able to pay off debt and build up savings faster than ever before. Keep up the pace on contributions. Your employer might match some or all of your contributions, so don't miss out on that free money. Be sure to contribute at least enough to earn the maximum match. Also, make sure to start taking advantage of the power of compound interest as soon as possible. Investing sooner will result in a larger portfolio over time. Look at the big picture. Investing is a long-term game, not a get-rich-quick scheme. That's why it's important to keep an eye on the bigger picture. Don't invest just for the sake of investing. Instead, think about what you want to achieve over the long term with your money. The goal is to achieve long-term gains and to build long-term wealth rather than to make a quick buck. So, if you're serious about investing for the long term, start by setting realistic goals and developing a strategy that will serve as the foundation for your overall plan. Maintain a diversified portfolio. A well-diversified portfolio will help protect your wealth from severe drops in the market by spreading your investments across a variety of asset types. Keeping your investments in different categories will limit your risk, which will protect your principal when the market drops. If you have a large percentage of your portfolio in one asset type, such as stocks, then you are more likely to suffer severe losses in that one area if the market drops. Keep investment costs low. One of the easiest ways to reduce your investment costs is to simply look for index funds and exchange-traded funds. These index funds and ETFs offer low fees, which means they will likely cost you less in the long run. When it comes to investing, it doesn't take much to get started. A little research will yield all of the information you need to invest wisely. In addition to that, there are a number of ways that you can lower your investment costs. Doing so will make it easier for you to build a solid financial future for yourself and your family. Join this helpful Facebook group to learn about saving and investing now. Gain your financial knowledge in a quick and easy way. Keep a balanced risk and return portfolio. An extremely high-risk investment may yield a very high return if successful, but it will also likely result in a significant loss if unsuccessful. Conversely, a relatively low-risk investment may only yield a small return, but there is also less chance of a significant loss. Therefore, knowing both risk level and returns is crucial to making an informed decision about any given investment opportunity. Knowing how much risk you are willing to take on and how much return you are aiming for will help you decide which investments might be a good match for your goals. This understanding will help you make better decisions about asset allocation and rebalancing, which is important because a significant portion of returns comes from doing so. Taking a loan from your plan. A 401k loan is a way to borrow money from your retirement account without affecting your current contributions. It's usually a one-time, small amount. If you need to cover an emergency expense, a 401k loan could be the answer you're looking for. If you need extra money for a short period of time, this is a good option. Ideally, you want to only take out larger loans when absolutely necessary. However, before taking out a loan from your 401k, it's important to make sure that you're using it properly and making the most of it. Actively look for bargains. There are countless ways to make money, but there are a few that stand out among the crowd. One way is to look for bargains in investing. Whether it's buying stocks at a discount or finding an undervalued real estate property, there is always a way to make money if you are willing to put in the work. Once you have found a deal, it's important to do your due diligence before making any investments. Make sure the investment is right for your situation and that you understand all of the details before making any decisions. Give us a like and comment below to let us know what you would like to learn more. This content is strictly for education purposes only. We do not provide any investing, tax, or legal advice whatsoever. Please consult with the professionals in order to make an informed decision for yourself about your situation and conduct it accordingly. Investing involves certain risks, including the possibility that you may lose money.